Hey guys, it's let's see, what is it today? Wednesday, on September 18th, 2013, and today I'd like to talk about trading the news and quickly lowering your risk after you traded the news. This also allows you to give opportunities for stocks that you missed on runs or something like that. So if you want to get into something that used to run up pretty quickly and you kind of missed the run, but you want to get into it as well because you missed the run, then this strategy will allow you to take the opportunity to go in and execute this plan with a lower risk. In either case, I'm Sasha Evdokov, and this video is mostly for the members and that are subscribed to my newsletter, but I'm going to share this probably publicly as well. So in either case, we're going to start off with the Amazon trade that I did today, and we're gonna basically look at it in terms of the daily. So we start looking at the daily and we see that, okay, let's just say, for example, I missed this run and getting into it on 9/17, and you can see the date over here, 9/17/2013 is when it broke, and it broke on heavier volume, and that's what I'm looking for. I'm looking for that break, and that's really when I should have entered. So let's say I missed that move, or even missed the move over here. Okay, let's say I missed that move, and then today we had a spike. We had a news event of basically the Fed tapering. Some stuff came out basically. So you're watching the economic news, and you're going to see what's happening and how stocks are going to react. So that's your goal. Your goal is not really the concern of exactly what the heck the news is. You're basically looking and watching the reaction. Okay, so the key point here is the reaction. Who cares what they say? It's how the stock is acting. Now today you'll notice I captured a huge run in Amazon, and in fact, let's just say, and I'll tell you, I went in with 4,000 shares on Amazon, but let's say I missed this move over here earlier, and I'm looking to get into Amazon. Maybe I want it to pull back to this 300 level and then enter. But I'm a little paranoid to get into it. So let's say that somebody, a trader as yourself, is looking to get into this with lowering your risk, because you don't want to wait for the pullback, because you don't know if a pullback will come. You don't know if the stock will run to 400, but you also don't want a huge or crazy risk. Now, what I like to do is actually I'm watching for the spike, and I know that this company on Amazon broke out here. Looking at the 15-minute, it broke this level. So this was really the entry point for the daily. Okay, so if we look at it here, you can see that there was the entry point really, or even here earlier, but let's take this one. This was the entry point, and then we missed that move. So here we are zooming in at the 4-hour, the 2-hour, you can see the same points, the hourly, the 30-minute, okay, and the 15-minute. So let's say we take the 15-minute and we miss this move right here. Now here we are in today's trading session, so we're not in the trade, okay? So let's zoom into the 10-minute. We're not in the trade. The stock market opens and the stock starts trending higher. But we know that there's economic news coming out at around, right around this time frame, at around 1, 2, 3 o'clock, right? So it actually came out at 2 o'clock, 2:10 is when the stock started reacting. And again, you can see by the time right up there by the date. Okay, so here we're waiting for that economic news to come out, and we're watching the stock, and we know it's a great stock because it broke out, and we see that it's positive. So for us, we assume it's moving in the positive direction. So what we do now is right here, we're waiting to see if it reacts and breaks other levels. So here I am zoomed in. So I'm watching this. It's still making highs, and because it's been positive the last 2 days. Okay, so it's following through on its movement. So now what I'm watching is now I'm creating these support points. Okay, so these resistance points actually. So I don't know what the stock is going to do, but I see it's making these new highs, and I'm watching this high right here. Okay, so as I move throughout the period, I notice when the news came out that this stock is now going and on high volume. This is the key, is this high volume right here on the lower right. Okay, and it's almost the initial opening volume, which is the jungle. This is usually where you get the most volume impact, is at the jungle. But now we made almost the same amount on positive volume as the opening. So this is when you enter big, is on this 307. So right here I could buy the 4,000 shares. So that's what I did. So you buy the 4,000 shares, and now all of a sudden the stock starts running. And this could be a fast movement. So you have to be itchy with your trigger finger and watch it very closely. And you may be in the trade for 10 or 20 minutes real quick, just for the leverage and supporting and hedging your position. So what I mean by this is you're in this trade for basically maybe 10 or 15 minutes, and you're watching it closely, and that's when you'll be able to secure your position and have it with a lot less risk. So in here, let's say you entered with 4,000 shares right here. Stock went up, and you might have sold 1,000 of those shares. So now you've made a profit of from $1. That's $1,000 gain right off the bat. Okay, from 107 to 108. So you sold 1,000 shares. That's $1,000 profit, and now you have the rest that you ride. So now you have $1,000 cushion that's basically on your stock portfolio for Amazon. So the stock continues to run for the next 10, 20 minutes, okay? You might sell another 500 or 1,000 here. So again, now you sold another 1,000. So now instead of from 107 to 108, now it went from 107, the other 3,000 shares, 107 to basically now 110. So now you got a $3 run, and you sold another. So that's $3,000 profit on the next 1,000 that you sell. So that's $4,000 profit right off the bat, and you still have 2,000 shares remaining. So now you're left with half of your position that you started with. And then the stock continues. And again, you can continue this strategy, or if you're looking for the longer term play, then now you're holding on. So now you can actually lower your support level to around where you should have gotten in. Now, keep in mind that one major pitfall of this strategy is that since you are leveraging a lot of shares, or more than double than what you normally wanted to get in, so let's say you wanted to get in at the the 2,000 share level right over here, but here you have to get in with 4,000 level. You want to be really careful because you are over leveraging a little more than you should be. Now, the only reason you would do this is because of the high volume spike. If you don't see the high volume spike at this time frame, like right here, and then the continuous follow through, you could have even continued to add right here and done the same little principle. If you don't see that, then you shouldn't be doing this, because it's really, a really bad thing to do is to over leverage yourself. So this would have been a great thing to do on actually Boeing. So here, looking at Boeing, you can see that right here, we should have entered the stock right here if we didn't enter it. And again, same thing over here on the higher volume on the gap up. And again, if we missed it, we could have done that on today as well in order to leverage up on our position. So let's just look at, I'm moving the time frame again to, let's say, the 15-minute. Okay, so let me zoom out here. Okay, this was our gap right here, and we missed the move. We missed the move a lot. Okay, we should have went in earlier, but let's say we missed the move. So in here, you would have gotten in right here. See, it was hitting earlier in the days the highs because the stock is positive. And the only reason I'm doing this is because the stock is positive. If the stock wasn't trending to the upside, if the stock wasn't moving to my direction that I wanted it to, then I'm not going to do this. Okay, so the stock was positive. So let's say I went in at 118 right here, and then I sell, so I go in with 5,000 shares. Let's say I went in with 5,000 shares. Okay, I went in with 5,000 shares, and then I sell a quick 2,000 shares right here at 119 because the volume is going up, and you got to be fast. Okay, because notice what happened over here. And you can keep your stop at the 118, or because you leveraged higher, you can move it maybe to the gap. But this depends on your risk-reward strategy. Now, the whole point of this is really to set up a proper support level for this strategy, so that way, because you missed the move. Okay, you can do this and add in different ways, and as your trading evolves and as you get better, you can use this strategy for whatever way you want. But really, the essence behind it is because you missed this move, and you missed this move, That's the reason you do it. And now you might move your support level to right here, because this is really the solid support. This is also a solid support, and this is a solid support. That's what you're looking for. The intraday stuff is very random and it's computerized, and there's so many trades that go off, so you don't really know. However, these levels are the support that really holds and stabilizes very well. So those are the levels that you really want to mark your support. And if you took your profits of, let's say, 2,000 shares because you had a $1 or $2 run very quickly, you basically have $2,000 in cushion, which now allows you to lower your support a lot lower, or your stop in this case. Okay, so that would be your stop right here, is maybe at this gap or right below this gap. Okay, it'd probably be right below this gap if you did that strategy. But again, you're giving it from a 112 level from a 118 to a 112 level. That's basically a $4 stop. That's kind of a huge stop in reality. In reality, you want, for the stocks, let's say under $100, you want maybe a $1 or $2 stop max. For stocks 100 to $400 or $500, you want a $2, $3, $4 stop, because they move and fluctuate. So for Boeing, it's a slow mover. You might want a stop of again $1 or $2 max, so it would be 116. But because we got in late, the whole point of doing that strategy is to be able to move that stop to 112.90. Okay, so when it breaks this or fills this gap, you would be out. So it just kind of gives you a little bit of hedge or leverage, and the amount or the position will depend on your risk reward strategy. So that's a strategy that you can do. Now I want to give you a little influence on why I wouldn't do this on Apple today. Okay, so again, looking at, let's say, the daily. Okay, let's look at this daily. Okay, looking at the daily, you see the stock is moving down. Okay, it's really trending lower on this graph right here, and you see the volume is pushing to the downside, so it's going lower. It is popping here and it could fill this gap, but I'm looking at it for a lower standpoint. And if you look at it, the overall trend, again, it's not really moving to the upside. Okay, so also here's another key thing. Okay, let me remove that just to convince you that I'm seeing that it's going lower. But if you don't believe that it's going lower, just stay with me and pretend that it's going lower. Okay, so on this stock, I don't see it moving higher. Okay, I see it broke right here, this trend line. Even if it was moving higher, it broke it. Now it's moving lower due to the volume spike over here. So now let's just say I'm looking at the intraday, so again the 15 or the 10 minute. Okay, and the stock did gap up from yesterday, and now where is our spike? Our spike is at this 1 p.m. level. It's right here. You can notice the volume coming in, and the volume was lighter than this volume over here. But notice that because the stock is trending lower, it didn't have the extra added juice. Okay, it jumped up and then it sold back down in that same tick mark on the 10 minute, and then it sold off further below the initial jump. It was kind of a short squeeze in a way, not a short squeeze, but it allowed the shorts to short some more. And that's kind of what happened, because the volume is pushing it lower. So here was our resistance level on the intraday. So it hit that, it hit the high over there at in the morning over here at 10:30, and it wasn't able to break it. Now if it broke that, maybe you could have entered it here, but still, looking at the daily, you're watching that daily is pushing it down. So on this case, if the news was a negative news, I would have traded Apple, because the negative news would have allowed you to sell more into the negative news, and then you can ride the stock further and lower. But right here, looking at the volume, it's pushing down to the downside. Okay, look at here, it moved down on higher volume. Okay, let's look at it on a 30-minute. Okay, again, where are the bigger spikes? The bigger spikes are right here, the downside. Again, the downside right here, the bigger spikes, and that's what you're watching. So if the spike came for the upside, there's no reason for me to trade this one to the upside. The upside would have been in things like the Amazon, okay, because I was watching it here and it only broke out the last couple days, okay, and I missed the move. The other fact is, like, let's say you take like a Lululemon, okay. Over here on the daily, it's spiking up today and breaking up right here. again, it allowed it to move and do a little bit of a juice. It gave it a little feed. Now, did it go on higher volume? It went a little bit on higher volume, but it wasn't on anything great. It allowed it to push through this. So the conviction might not be there tomorrow. So we're going to see tomorrow if this follows through. So basically, I want to do this kind of strategy on stocks that are setting up for the intraday already, or for the daily graph, I'm sorry. So looking at it on Netflix again, okay, so let's just say we're looking at it on Netflix. It allowed you, again, the opportunity. It didn't move earlier before, but it pushed it higher beyond this trend line. Okay, it didn't move it, the stock didn't gap up on its own before the news spike. The stock gapped or moved further only after the news spike, basically. And although it did give it some juice and it can have momentum in the future, the safer bet would have been on something like an Amazon or even a Boeing, if Boeing was on its first or second day already moving up, because then it was doing it on its own. It had the conviction to move by itself without the juice of the news. Now we got the added juice of the news, and now it created things like steroids. It created this steroid effect in the stock. So 3 days into Boeing might be a little late, but you can do it. Amazon was actually the perfect play for this type of thing because it was setting up, it set up, it broke it, it moved, and it just gave it some extra added juice. Boeing, still possible. You could have done this strategy, but again, it was 3 days into the run. Things like a Lululemon, it actually helped break out of that, but that doesn't mean the stock did it on its own. But now it still of course can continue in the future to move further, but it doesn't mean that it has its own conviction. But now it may. Now things may turn around, and same thing with Netflix. Looking at it again, on the 30-minute, you can see again the news helped drive it higher beyond this trend line. So in summary, what I'm trying to get to you is that it's better to do it on stocks that had the run or are breaking out on their own first, and then do this strategy. And the reason you want to do this strategy is if you miss the run. You're not going to do this and put a whole bunch of risk into it if the stock doesn't have conviction or juice. If it does break out, and it does have the volume, you can still do the strategy even if the stock isn't a great mover, but you got to be quick on the trigger, and that just makes it that much more risky. And that's why I prefer to do it on stocks that already had the move slightly on its own, or are moving earlier in the day or the last day. That way you can capture the gains and ride that momentum. Now again, remember, you're selling the half of that position real quickly so you can lower your risk quickly. And you're doing it because of the high volume spike. You're not doing it because, hey, it's just breaking out of this thing. It's got to have that high volume, and that is key. Anyway, that's my little training lesson for today, and it's a pretty good one. So watch, learn, and study. And remember to do what you love, contribute to others, and most importantly, live life abundantly. I'm Sasha Evdokov. Thanks again for watching, and check out my courses, check out some of my stuff, and if you're not on the newsletter, go ahead and subscribe, because I like to send out these videos, and I got some good training coming up soon in the next couple months, so some intense things that you might want to be in contact for.